Stocks our strategists feel are poised to deliver positive returns are featured now in their top stock picks of the week.
Hey, Kevin Cook here, kicking off our top stock picks of the week. My top pick is Cadence Design Systems. You're looking at a daily chart right here. I actually profiled this for top stock picks back in May. Let's see here, May 24th. Just trading $127 or so, and I still own it. Took some profits, but not until after earnings. Earnings were right here, July 26th, and you can see consolidated just below that, another beat and raise quarter, and then we take out this 147, 148 resistance. Checked back to it last week, and you got another chance to buy it. Making new all-time highs here, 157.75 as I look at it on Monday morning. So obviously, after the beat and raise quarter, it's back in the upper realms of the Zacks rank. And again, I still own it. So let's take a look at what's going on here. Flash back to the top pick I did the week of May 24th. I showed a report I'd written for Taser subscribers where we own it, called the Semi-Ecosystem, the Lightning Resurgence. It was kind of a no-brainer for investors that software would continue to eat the world after the pandemic, but we weren't so sure about chips. And you just saw the stock start to take off, and then by January we're in the middle of a chip shortage, and it's just, if software is going to eat and run the world, you got to have the hardware to do it. So we need chips for the data centers and 5G, and NVIDIA. We're going to talk about NVIDIA because NVIDIA is one of the biggest customers for Cadence Design Systems. And NVIDIA uses a software hardware stack. So let's talk about what Cadence does. All right, so here was my buy alert on May 21st. And we need to learn some key acronyms here for how they are the software brains of chip design. One of the acronyms is System Design Enablement, SDE. So, this is basically, the way I describe it is, when I was growing up, we learned about CAD/CAM, computer-aided design, computer-aided manufacturer. This is like CAD/CAM for AI, CAD/CAM on steroids. And, so they use these special monikers, SDE. And the other one is Electronic Design Automation, EDA. So these sort of platforms and methodologies that allow engineers to design chips, without having to create any hardware, but just, get the design right with, powerful software is key to this business. So one thing I want to note here, they talk about IPs. IPs is just what you think, intellectual property, but in the semiconductor industry, they'll refer to them as IPs, and so a longer way of describing it, reusable integrated circuit design blocks. Think of Qualcomm making its specialized chips for a handset, mobile phone, smartphone that Apple might buy. It's almost like a little black box, right? Or ARM Holdings does the same thing. So this software is critical for any chip designers, and we're going to see why NVIDIA uses them. Showed you that. Okay, yeah, so we're going to go we're going to hear from the man himself. So this was a presentation that Jensen Huang, CEO of NVIDIA, did a keynote for a big high-performance computing conference in France. It was actually virtual, so he just taped his 18-minute keynote speech and sent it over to him. TerraTech is some European symposium or industry alliance, but HPC stands for high performance computing. So Jensen he just got done talking. This is in the first 2 minutes, he was talking about how NVIDIA hardware and software stacks are being used, across the sciences, right? In digital biology, climate science, medical imaging, and then of course all kinds of artificial intelligence capabilities, or automation, robotics, autonomous driving, that kind of thing. Here he was showing what they've done in film with Star Wars and obviously internet stuff, but the middle picture here, focus on that. This is a DGX box. This is like an AI supercomputer in a big box, and it's got 8 of their latest, mega powerful chips. Like these are the Ampere 100 chips. Each of them has 54 billion transistors. So, 8 times 54, you're talking well over 400 billion transistors in this box to power stuff. So let's listen to Jensen talk about, he only mentions one other partner here, and you're going to see who it is.
NVIDIA's success is partly due to what we build, but much has to do with how we build it. NVIDIA codified early on the philosophy of building our chips fully in silico and only sending to fab what we believe will be perfect. NVIDIA simulates everything and invests whatever it takes to enable that to happen. We've invested billions in our chip design infrastructure, in hardware and software to simulate our chips and systems. Simulation lets us find problems at the least costly phase of a project.
Okay, so there you heard Jensen featuring Cadence as one of their partners in simulation. Let's simulate everything from the design of the chip to actually how it's going to operate. And they can do that before they send the design to the, wafer fabrication places like Taiwan Semi or Samsung. So it was just so cool to see Cadence featured in this keynote from Jensen. All right, want to tell you real quick about the only real peer of Cadence is Synopsys. And my colleague Dan LeBeau did a bull of the day recently on Synopsys after they reported a stunning beat and raise quarter, and the stock has surged to all-time highs. He opens with something I've never really looked into, but this idea that the U.S. the government is going to get behind rebuilding our chip infrastructure and get rid of the chip shortage instead of having everything made overseas. What do we need to do here? So there could be this $50 billion bill. Who knows? In the meantime, the stocks are just taking off, and they're a strong buy. Another thing propelling semis today, last thing here, is the deal for Analog Devices, ADI, to buy Maxim got approved by China regulators. That's got all the chips up because this possibly means that NVIDIA will get to buy ARM Holdings. So we'll see. But if you want to buy the brains of chips, consider Cadence Design Systems. All right, next up, Dan LeBeau with his top pick.
Thanks, Cooker. I'm Daniel LeBeau, editor of the Headline Trader Portfolio, and today I'm going to be pitching Seaworld. This company's been under a lot of pressure since the Blackfish documentary came out back in 2013, but is coming out of this pandemic with a vengeance. The company has really tried to pivot away from its orca exhibit. Obviously, Blackfish showed some of the conditions that these killer whales were kept in and how it caused them stress and anxiety. It led to 3 different deaths in these parks, and the company is now, like I said, pivoting away from that. Now their orca shows are only going to be informational and provide awareness about this highly intelligent being, in the marine being, should I say, marine mammal. And they have stopped breeding these orcas ever since 2016 and have been heavily investing in operational drivers outside of this exhibit, because this exhibit was its largest, attendance driver and drove the most foot traffic at its, 8 parks and, 5 water parks, 8 theme parks, should I say, and 5 water parks. And now this company is coming out of the pandemic, like I said, stronger than ever, illustrating a record profitability this past quarter. And it's really doing something that none of its cohorts can compete with. Cedar Fair and Six Flags are all lagging behind the operational recovery that SeaWorld has seen this past quarter. And I think we only can see a larger upside from here. So let's take a look at the chart, see the opportunity, and see where the stock's going to be trading in the next 12 months. So this is SeaWorld on TradingView.com, ticker SEAS. And you can see since they started trading back in 2013, they have experienced a lot of volatility with obviously the pressures of Blackfish causing analysts to abandon ship. But ever since 2017, this company has turned around its operations and turned back into growth. And that's what we're seeing today with this pandemic boom. We traded all the way down to less than $10 a share from the 36, 37 level that we traded at pre-pandemic. And this is to be expected as foot traffic in these parks is a big pretty much the only the only driver. And with these parks shut down, there wasn't a way for them to drive profitability and drive their top line. But they've come out of this thing, like I said, with a vengeance, blowing analyst estimates out of the water, which is reflected in these huge moves, in these huge post-earnings price action. So today, I think we are trading under its intrinsic value. We had a really strong earnings here that illustrated record profitability 2 weeks ago. You can see the big jump we had here, but the Delta variant is hindering these shares and keeping them below where I think they should be trading based off of their Q2 results. We bounced off a key technical level here last Thursday, and we are headed higher, breaking above the 50-day moving average today. And I'm looking at price targets, $60 and above. I've seen them as high as $79 based off this latest earnings, as analysts get real bullish about this savvy management team that has proven to be able to put the Blackfish stigma behind it and push towards a attendance driving operational structure. The way that Seaworld has come out of this pandemic is more than surprising to me. I thought this company was going going down the drain after the Blackfish incident, and they've done a tremendous job. They've shown tremendous ability to shift their operations into something that consumers want. And you can see that coming out of the pandemic, they've done a better job than any of their competitors. Cedar Fair, Six Flags, they've been able to drive foot traffic more better than any of these other competitors who have had a long-standing relationship with their clients that hasn't been tainted with things like Blackfish. And we're still coming out of this recovery. We still have a lot more upside to this foot traffic, and SeaWorld is poised to benefit from it. So I wouldn't hesitate to put a position on SEAS. It's the ticker for SeaWorld. So don't forget to check that out, and check out Zacks.com/promo where you can get a first look at our home study course. So check that out at Zacks.com/promo, and thanks for listening, guys.